Okay, Tuesday. All right, what we got going on here is this is the data coming up for Tuesday. Also Friday, we have GDP, other numbers here. Canada here. Remember, we're watching the Canadian dollar on the long side. Because of the commitment of traders. Okay, this is this morning's data. Here's a PMI composite flash, red star event, as they say, new home sales. We can start there. We're in the summer months. We should be selling some homes. Mortgage rates have been going up, but we have seen that paper has come back. Okay, so I'd expect that people would be gobbling up homes because we still have more appreciation to go on the upside on the cycle here. So, all right. So, sales wise, like I said, my only caveat is the baby boomers. We're going to have a lot more supply. So, but as we've seen in Gary, Indiana, and places like that, we just abandon the things and build new ones. All right. So this is getting to be a little bit off on the median line. If you just mentally look at a mean line here, it's kind of banging and underneath it here. So. All right, so that's it. And then also what I wanted to poke out was I always like when information comes out this way. Where are we at? PMI flash. Okay. Has held steady in April moderate, which is above either of the two components. This anomaly aside, I love when you have data, this anomaly aside. Moderate growth is what it's saying, okay? And that's basically what we had in the 1930s too after we came out of the Great Depression. Kind of like the Great Recession, you just have to kind of follow the stock market thing. But if we have to, pull back on interest rates and lower them for whatever reason, I'd expect equities to come off. Usually they go up, but when you unwind everything. So, all right, and then going through the charts here real quick, I printed off a copy of the 10 here again. I'm going to have to change some of these because they're not moving, and basically, I don't have a weekly on this, but I have a daily, and then some of it, like this is a daily we're running into where I don't have a weekly. So then you have the 2-hour, which is a little more skittish. Overall in general, as you can see here, I'm going to try and give gold a little bit of, basically I'm more up on the gold for the dollar coming off or gold coming down because the dollar is going to bounce, that kind of thing. GDX here, you can see they're not on here, but I made a chart of the A, B, C, B pattern, and then C would be a swing higher here. With any type of inflation. Silver, basically the same thing. I think it retested the trend line. Yeah, like I said, yesterday's video, if I extend the trend line here, I get to clean up the stuff today again too, don't I? Same thing. Maybe bounce on the back end of the trend line, but I'd rather go somewhere else on this one. Now we're back to oil. Oil, we came up to the pivot here on a daily, and we got a harmonic cross, so I'd expect some sort of pause here. This looks pretty good for hold for right now, but if you do look, it's the larger sideways pattern. So if there's any failure up here, I'd expect it probably then to slide all the way through into the recession. Here's UNG, which I don't like. Because I had it one time and didn't get my tax forms until the 16th of April. Possibility to swing higher on here, just like we saw with oil. It got up to pivot on here, and that was on a daily. And here's a daily, and it's above pivot, so you have the chances of sliding into this area here. Like I said, to each their own. If you want to play it, that's fine. There's also the mini futures, which I think are like $500-600 or something like that. Half the size. What was it? $12.50 a tick, so you get your feet wet there. But what I did is I personally added gas, GAZ, around 40 cents. I've done that before a few times and buy at 40 cents, sell at 60 cents. I'll be more than happy to take 50% return for a year's worth of work. And I can just gobble it up, whatever I have. I have $4, $40, 40 cents, whatever, buy another share when it comes down here. That kind of thing. That's GAZ. It's part of the gas thing, and look at that real quick. The gas, it's part of the gas thing now, and degas. It's basically been going sideways here, and then from our bottom. So I find it as, this is at least some support. Anything comes down here, then I'd probably want to come in, buy 39 cents, 38 cents, 37 cents, that kind of thing. But any type of breakout here, I mean, if I'm buying at 40 cents and it goes to, here's 60, played that way, all of a sudden you can go to $1.10. So now you're, I'm not in the futures, but I'm getting a futures return. I mean, here it went from 30 cents to $1.10. And what's this, a weekly, right? So 2 weeks, 2 week period, opens here, trades down, and shoots through the other side. Well, there's not a lot of volume. That's why I have to keep going in, So, you buy 1,000 shares, you're gonna be, what, 3%, or no, a little more than 6% of the daily volume. Bam. I've had some of those happen in options where I was the 100% of the options. Okay, so we're gonna leave it at that, and then NYA. Go back to this one here. Now, what I did, I added, these are quadrant lines, so it's just this area here, this movement. What I'm looking for is we have the behavior here where this is the underlying issues that are participating in, either in with the rally or not. So we have a peak in participation here on the New York Stock Exchange, and then we're getting popping to new highs. We're not getting the issues. Two schools of thought: either we get a broad-based rally, which I wrote about this morning, is going to run into the summer doldrums, right? Or all that's left is your Amazons and your number one, at the top, whatever 500 market cap stocks, or the greatest returns in the last year, that kind of thing, 6 months, as the main runners. Remember, they also affect the index. If you're Apple, you're not 1% of an index, it might be 12 or 14%, and as you increase, it's a greater amount. So it's a self-fulfilling prophecy kind of thing. I'm going to lean, though, for right now, if we poke our head back above 2,400, that the folks will be going towards the other issues. You have to watch IPOs, too. Where are my quadrant lines here? Well, that's just not right. Oh, I know why. How about this page? Oh, it's not on that page either. Wow. Something's not right. We have to fix it. Quadrant lines here. So from this low to here, save this. Oh, that's probably what it is. Okay, so now I have this here. Let's take a look. All right, so we have our blood here, which is the large caps industrial ones. Then we have the oxygen here. This is new. This is, new industries. Apple moved from this one to this one kind of thing. You know what I'm saying? These are more established, mature companies. They run on their own. Let's see, gap resistance, extremely bullish. We have that. Okay, so this is holding up a little bit better. But what I wanted to point out was here on this move, when we had the divergence here and the pink dots, the divergence, once it broke through the lower end, which I would say here, there was a precipitous decline. Okay, this is when China devalued the yuan, we went up, and this is the first hike in interest rates. Okay, so now we've shot all the way up through here. I'm expecting some sort of failure up here. Now the deal is that the angle of ascent should increase as the people realize that, we have lower interest rates for right now in the bonds. So if the stocks continue higher, you probably want to dump some debt. That's what I talked about. You have the people begin to believe this every time something happens. You're talking about just like the bombing in England. There was a bombing in the Tube, the subway system, in July of 2005, and the market was down, I think, whatever, 300 points, and it closed green. So this is the assumption on this one too, is that you can't derail it. But like I said, that was July of 2005. Homes peaked in December of 2005, and the stock market peaked for its first time ever in October of 2007. So that's how I'm looking at it. We're walking into a recession here. Now we're a little bit soft on the economy here. And that's why we got the bounce in rates, and we went from basically 100% of a hike in June to, I think it dropped to 70. But, those type of moves in my eyes are done. And so you're looking to go the other way here. You're looking to, already started to dump some paper when they swipe the new highs, like the 5s and the 10s, that kind of thing. So on here, if we come back, I'm going to say here, this is the first line, like here's the first line that lost it, but basically you would know it here, but it basically fell here off the bottom. It was just to a T. So the same type of deal that comes down, I'd expect to come back in. I would use these two as support lines for right now if we do roll over on this New York Stock Exchange. It might slice through, but there was enough news with it, and this is daily. So this is 1 day, 2 day, 3 days. So you didn't have much time to think about it. Take a look at how long this was. This was May. It was a high in May in 2015. I mentioned that before. Or wrote about it, May 15. And so it went on for, what's 3 months, 2 months, 10 months, 10 months. Okay, so you wouldn't look to, you'd be looking to try to play March of 2018, futures. So this is how that works out. You can buy deep puts, or depending upon what you have, you can buy a put that's deeper in the money, and so there's not as much extrinsic value in there if you don't have enough to play like the futures or something. But you could have, and here's the other one too, is that they will have issues rolling over on their contracts here. We're going to have rollover here in about 3 weeks or so, and then we're going to have quad witching and all that fun stuff. I believe that's what's that? OCC. You're not going to give it to me. Calendar. One of these days I'll save this stuff. Options of calendar. Okay, so for June we're in May. We're in this week, holiday on the 29th, and then we have 2 weeks, 3 weeks, 4 weeks, 4 weeks until expiration. VIX expires after, right? That's the purple VIX expiration. So VIX expires after triple witching or quad witching. It's not quarter anymore or quad because they get out on the 15th here. See, that's AM settled index options. That's like your SPX and stuff. So that goes afterwards. Here you can see VIX expires before. Here's one after. How did March work out, or April following that kind of thing. So also I took the old slot machine where you take $100 and stick it in a slot machine. It was VXX 1415 calls. Good for the week. Basically, the other way you can look at it too is you can always lift that cheaper leg for a couple of pennies. And then you have an open-ended one. Like today, if today the market shoots up higher, maybe I'll probably lift that one, and then I have, a 3-day, if anything, the market should roll over, that kind of thing. What do we have? I can roll the thing over too. If it comes back down, I can roll it over to next week. Just like I said, I just look at it as, it was, if it maxes out, goes to $1, it's a 6-bagger. So, you say you throw $100 at it, then you have $600, or we'll say 500 minus expenses for the next trade. And now you can put 5 of them on. How about this? Buy both the calls and puts on something else, right? If you get one to max out, the other one loses, now you get a 4-bagger. That kind of back at that, 16, whatever, 17, 16, 15 kind of thing. But we'll discuss that later. But I'm going to put this up to you guys here. This is just on the SPX and stuff, and then I'll go over and do the futures here so you guys can look at this real quick here. All right. I think that's that for right now. Yeah, we'll just do the POCs here real quick. You can see that up in here, we haven't hit that yet, but we can still whack it. Oh, Kevin's back to whacking it. He's such a good boy. See, here it is. We're coming. So this would now be support. You can see the bell curve. You're going to have people that are kind of going to press up against this one. I'm not saying you can't go higher, but the deal is you want to watch. You want to set an alarm here, 138.50 on the Qs. Anything comes through, just you might not cover until next year. You know what I'm saying? So it's one of those that, if you do get one that snags, you got to hang on. There's going to be overhead resistance there. What did I say? I think DIA, so it's never going to get up there, but it's going to get close, right? There's 210. A little, we're kind of jumping back in here. Let me see about the Qs again. Check the money flow and stuff. Yeah, see, they came in here, so it'd be, it'd be the deal where you sell them off here, or wait till the end of the day and add puts or something, that kind of thing. But the angle of ascent, if we do bust higher, the angle of ascent, it will pick up. People will have to chase after it. Short cover and rally. Take a look at all the little stuff, all the stuff in your Robinhood account. I think that's that, right? IWM, SPY. Let's take a look again. I didn't look at the money flows here. Money flow still holding in there. They never gave up on here. They just hedged with futures. DIA, IWM. Russell doesn't come on here. Right? IWM. That's most popular. Yes, it's going to have overhead, but they never came in. So the Russell is the one you could run today. See, the money's not in there, but it's moving higher. The Russell's one you can move today, the little guys. So I'd have to say is if you do have something in your account, your Robinhood or something, you may want to set some limit orders on there. Overhead. Okay, I think that's it, right? You got your calendar for today. And don't forget you have GDP and stuff on here. More existing homes, more new home sales, blah, 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 yada, yada, yada. I think that's it for now, right? Yes, better save one of these. All right, everyone take care and have a good morning. I'm going to do the videos now on futures and stuff. And that's that. Toodles.